Hello, everyone. Professor Reiko here again, continuing on with our lessons on the statement of cash flows. So this video is a little bit quicker. It's just going to walk through the steps that we go through to do a statement of cash flows. All right, and this will be the same regardless of whether I'm doing a direct method or indirect method. And keep in mind, though, with the operating section, we're going to do between the direct and indirect, the operating section will be different. All right, the number will be the same as far as the net cash provided by operating activities, but the way we go about doing it is a little bit different. All right, so step one is compute the change in cash for the year. So basically what this means is I'm taking the cash at the beginning of the year, which was last year's ending cash balance, and comparing it to this year's ending cash. All right, that difference is my net change in cash for the year, and that is going to be that net change in cash number is going to be the number that I get when I net my operating, investing, and financing sections together. Okay, so you're kind of starting out by already knowing the answer. So that's kind of one of the nice things about a statement of cash flows is you have a check figure built in. All right, step two, all right, it says convert the income statement from accrual basis to cash basis, all right? So this is basically doing our operating cash flow section. All right, so one thing that when it says, income statement from accrual basis to cash basis, something to keep in mind, I mean, think about an easy accrual. So if we sell something on account, all right, that is our journal entry, right? So that's recording the revenue before the cash is received. Okay, so that's kind of, in a sense, an accrual journal entry. All right, so notice this revenue right here affects income. All right, so convert the income statement from accrual basis, which is this journal entry, to the cash basis. All right, so notice here there's no cash. All right, when does the cash come in? Well, the cash comes in when they pay us, right? So, you've done these journal entries right here 100 times, at least over your, couple years of accounting now. All right, so what we're trying to get to now is what is the cash that was paid? Okay, or I should say cash that was received from the customers, right? So that's what we mean by converting it from accrual basis to cash basis. All right, so we do the operating section by eliminating non-cash items. All right, so when you think about that, depreciation, amortization, depletion. All right, so think about those. Just think depreciation. I mean, what is our journal entry for depreciation expense? We debit depreciation expense and we credit accumulated depreciation. All right, so there's no cash in this journal entry. All right, depreciation never affects cash. All right, however, this expense right here lowers income. All right, so we need to back that number out because it affects income, but it does not affect cash. And remember, we're converting now to our statement of cash flows, so we're only worried about cash. All right, eliminate gains and losses associated with financing and investing activities. All right, so what you're going to see when we put numbers to this is, all right, when you think about a gain or loss, that means we sold something and we either sold it for above or below its book value or carrying value, however you want to look at it. All right, so there's definitely cash in that transaction. So why would we eliminate that? All right, what we're doing is we're eliminating it from the operating section because remember, when we sell a fixed asset, it's down here in the investing section. All right, so when we put numbers to that, and when we get to examples, that will make a little more sense to you. All right, so essentially we're removing them from this section because remember, gains and losses are in income. All right, they go on our income statement. They affect our net income. All right, so we're taking them out of that number and we're going to put them in the investing section. You'll see that when we put some numbers to it. And then we're going to adjust for changes in the balances of the current assets and current liabilities. Remember, current assets, current liabilities go in the operating section. All right, so things that affect net income, these, and current assets and current liabilities, this third bullet point, those are what go in the operating section. Okay. All right, and I will have a shortcut that I'll put at the beginning of the next video to deal with these changes in the balances that makes your life pretty easy. I'll kind of show you why it works, and then the shortcut will get you the answer every time. All right, analyze long-term assets for cash flow effects of investing activity. So once again, this is our investing cash flow section. Then remember, we go on to long-term debt and stockholders' equity. So that is our financing cash flow section. So remember, these are our three sections: operating, investing, and financing. All right, now notice what it says here in 5. Make sure that the net cash flows from 2, 3, and 4 equal the change in cash from step 1. So that's what I said when we were up there talking about step 1 is it's a check figure, and it should be the number you get when you net the operating, investing, and financing sections together. All right. So that's basically how we're going to go about doing a statement of cash flows. All right. There's also supplemental disclosures. All right. That go after your statement of cash flows. I typically allow my students to just kind of omit these, or I won't even put them into a problem. All right. So kind of gauge where your teacher is at with these. I'm more or less focused on can they do the entire statement of cash flows from start to finish, not whether they can put a couple of supplemental disclosures at the end of the statement. Okay, so you can read here, the cash paid for interest, expense, and taxes. All right, so why are these supplemental? Well, cash paid for interest, expense, and taxes. Interest, expense, and taxes, those are already included on our income statement. Okay, so this is basically just supplemental. We're showing what those numbers were for our investors and potential shareholders. Right, so that is how we go about doing a statement of cash flows. Compute the change in cash, and then do our 3 sections. Make sure our change in cash that we computed at the beginning matches up with the net of our 3 sections, and then we'll wrap things up from there. Right. So what we're going to do next is dive into the direct method. So I've got 2 videos on the direct method. One where we kind of walk through what we're going to do with the direct method, and then do a couple of quick, almost like multiple choice type examples. And I'm going to kind of show you the shortcut method that can be used for both the direct and indirect method. It works both ways. It's just, for me, it's a little bit easier to teach it using the direct method. So I typically start with that. All right. So that is how we're going to do a statement of cash flow. So our next 2 videos will be on direct method, and I think the 2 after that will be on the indirect method. All right, so hopefully this kind of gets you squared away. So make sure you tune into the following videos, because that's when we really get into doing the examples that will pop up probably come exam time. All right, hope you enjoyed it. I'll see you next time.